The history of capitalism in America before the United States existed. Before there was a Congress, a Constitution, or a single American factory, there was a spreadsheet. A group of English investors pooled their money, bought a charter from the king, and sent ships across the Atlantic with one goal: turn a profit. They named the settlement Jamestown. Most of the people who worked and died there weren't citizens of anything yet. They were employees. Capitalism didn't arrive in America after the country was founded. It arrived first on the very same ships. A company before a country, the Virginia Company of London, was chartered in 1606. A joint stock corporation built to extract profit from a continent nobody in England had ever seen. Investors bought shares. The company hired colonists, shipped them across an ocean, and expected returns. When Jamestown nearly starved in its first years, that wasn't a national tragedy. It was a failing business, and the company kept sending more labor anyway because the land itself was treated as pure upside. That pattern repeated up and down the coast. Land was available in staggering abundance, and almost none of it belonged, legally or otherwise, to the people running the ventures. Getting it meant displacing native populations who had lived there for thousands of years, sometimes through treaties nobody intended to honor, sometimes through outright violence. Capitalism's first American chapter wasn't written in factories. It was written in land grabs, backed by royal charters, and enforced by whoever had more guns. By the early 1700s, a second engine had been bolted onto that same machine. Enslaved Africans were treated not as workers, but as capital itself, bought, sold, insured, and used as collateral for loans. Southern plantation economies built extraordinary wealth on cotton, tobacco, and rice, and that wealth flowed directly into northern banks, shipping companies, and textile mills. American capitalism's early success and America's original sin were not separate stories. They were the same transaction, running through the same ledgers. A nation built without corporations, here's the detail that surprises most people. For all the talk of capitalism defining America from day one, the business corporation itself was almost nowhere to be found. Fewer than 30 corporations existed in the colonies before 1789, and most of those failed outright. The founders distrusted concentrated economic power almost as much as they distrusted concentrated political power. Corporate charters were rare, temporary, and tightly controlled by state legislatures. That changed fast. The 19th century turned the corporation from an exception into the default. Industrializing nations abroad needed raw materials. Cotton, wool, grain, lumber, coal, and America had all of it in staggering quantities. Getting those materials to market required transportation on a scale no individual merchant could finance alone. Canals needed capital. Railroads needed even more. And the corporation, that once rare legal invention, turned out to be the perfect tool for pooling enormous sums of money from investors who would never meet each other, let alone the workers laying the track. Railroads didn't just move goods. They built the financial architecture of modern capitalism itself: stock markets, bond markets, and the first truly national companies operating across state lines. The age of the robber baron. By the late 1800s, industrial capitalism had produced a new kind of American figure, the tycoon. Andrew Carnegie controlled steel. John D. Rockefeller controlled oil. Cornelius Vanderbilt controlled shipping and rail. These weren't just wealthy men. They were architects of entire industries, capable of setting prices, crushing competitors, and quietly deciding what an American worker's day would look like. The numbers from this period are hard to overstate. Rockefeller's Standard Oil controlled roughly 90% of American oil refining at its peak. Carnegie sold his steel company for the equivalent of hundreds of billions in today's dollars. Wealth concentrated at a speed the country had never experienced, and it concentrated in fewer and fewer hands. Workers noticed. 12-hour shifts, dangerous factory floors, and wages that barely covered rent produced exactly the kind of resistance you'd expect. Strikes spread across the rail lines, the steel mills, and the coal fields, and companies responded with private security forces, strikebreakers, and occasionally outright violence against their own employees. The labor movement wasn't a footnote to industrial capitalism. It was the direct, predictable consequence of it. When the machine broke by 1929, the system had built itself into a fever. Stock prices climbed on borrowed money, banks gambled with depositors' savings, and almost nothing regulated any of it. Then it collapsed all at once and dragged the entire country down with it. Unemployment climbed past 25%. Banks failed by the thousands. Bread lines stretched down city blocks that had, only a few years earlier, been lined with stock tickers. This is where the story takes a turn nobody expected. The federal government, which had spent a century mostly staying out of the economy's way, stepped directly into it. Franklin Roosevelt's New Deal built Social Security, federal deposit insurance, and securities regulation almost from scratch. Capitalism didn't disappear. It got a set of guardrails it had never had before. And for the next several decades, the government played an active role in managing the system it had once simply watched from a distance. The boom, the break, and the rewrite the decades after World War II produced something close to a golden age for American capitalism. Rising wages, a growing middle class, and a level of shared prosperity the country had never quite managed before. Unions were strong, corporate taxes were high by later standards, and for a while growth and equality moved in the same direction instead of pulling apart. It didn't last. The 1970s brought stagflation, oil shocks, and a growing sense that the old New Deal framework had run out of answers. What followed was a deliberate rewrite. Deregulation accelerated through the 1980s. Taxes on high earners and corporations fell sharply. Financial markets grew more complex, more global, and increasingly disconnected from the factories and workers that had once anchored American capitalism to something physical. Globalization sped the transformation along. Manufacturing that had defined entire American cities moved overseas in search of cheaper labor, and finance itself became one of the country's largest industries. No longer just a tool that supported the economy, but a product the economy sold. Built to break, built to rebuild that financial complexity caught up with the country in 2008. Mortgage-backed securities, built on loans that should never have been issued, collapsed the global financial system almost overnight. Banks considered too large to fail were bailout out with public money, while millions of ordinary Americans lost homes, jobs, and savings. It was Rockefeller's monopolies and 1929 speculation dressed in new financial language, the same underlying pattern of concentrated risk, wearing a different suit. American capitalism has never been one fixed system. It has been rewritten again and again, by land grabs, by slavery, by railroads, by robber barons, by depression, by war, by deregulation, and by crisis. Each era leaving behind rules that the next era would eventually break and replace. The company that sailed to Jamestown in 1607 and the algorithms trading stocks in milliseconds today would look at each other and recognize almost nothing. And yet the underlying instinct connecting them, extract value, deploy capital, chase return, has never actually changed. Every dollar moving through the American economy today carries 400 years of that same instinct behind it. We just rarely stop to think about that. If you found this story fascinating, hit subscribe and drop a comment with a history topic you want explored next. And if this video taught you something new, leave a like so more people can find it.